The Placing You First podcast begins in less than 20 seconds.
Visit crcgroup.com to subscribe, download our award-winning tools and intel articles that help you stay aware of emerging issues and trends, or get a snapshot of the insurance marketplace with our industry-leading Ready indexes. You'll find it all on crcgroup.com under Tools and Intel.
Welcome to Placing You First, where we bring you real conversations with industry leaders and insights you can use right now. I'm Scott Gordon.
And I'm Amanda Knight. And today we're talking about equipment protection, specifically how Starwind Equipment Services is redefining the landscape with solutions for physical damage and extended service coverage.
And we're thrilled today to be joined by Randi Glazer, president of Starwind Equipment Services, who will help walk us through what makes this program different and a better option for your clients.
This is the Placing You First podcast from CRC Group.
This podcast features news and insights from a vast knowledge base of more than 5,500 associates who write more than $30 billion in premium annually.
Plus, we give you the latest information on what's happening at CRC.
This is the Placing You First podcast.
And now the hosts of the podcast, Amanda Knight and Scott Gordon.
So Randi, let's start with the basics. This is a new program, right? It's not been out and about for very long. So what does Starwind Equipment offer, and what problem are you looking to solve in the equipment space?
Hi, Amanda. At Starwind Equipment, we offer physical damage insurance, or PDI coverage, and extended service contracts, or ESC, for contractors' equipment at the point of sale. Having more certainty around heavy equipment ownership reduces the burden and anxiety of future repair costs. Our target customer is any business looking to purchase construction or material handling equipment up to $500,000 or less per piece of equipment or per policy. This generally includes small to medium-sized contractors or warehouses, or anyone purchasing this type of equipment. We run the gamut of types of construction equipment we cover, with a few exceptions. We don't write agricultural equipment, equipment used for forestry or logging, energy equipment, cranes, recycling equipment, equipment used for above or below ground mining, or equipment that is intended to be used as rental equipment. Rental equipment is specifically excluded from our policy. Having a ceiling of $500,000 per piece of equipment in effect takes us out of the most hazardous types of construction. We write policies in the 48 contiguous states except for California, Oregon, Vermont, and the state of Washington. However, because this equipment is mobile, if a piece of equipment makes its way to any of those states, rest assured the equipment is covered under our policy. To make sure we are able to source parts to repair equipment, we do not write equipment that will be older than 20 years at the end of the policy. It should also be noted that we do not write equipment that is titled or plated. The physical damage insurance would be covered under their commercial auto policy.
Well, now, anyone in this industry doesn't have to be told that there are lots of options out there. So, Randi, what makes Starwind different?
Scott, we can offer traditional annual policies when equipment is purchased outright. However, one of our competitive advantages is our ability to offer a multi-year policy on admitted paper when equipment is tied to a lease or a loan. We can write the policy for the life of the lease or loan up to 60 months. The lost payee is added to the policy, which makes finance companies happy, not having to track down insurance coverage for as long as our policy is in effect. Our policies can be written for new or used equipment. If the equipment is financed, we can offer a multi-year policy and our rates are locked in for the life of the policy. The PDI premium can usually be rolled into the customer's financing agreement. Our policies are paid in full at policy inception. This means the policy cannot be canceled by us for non-payment or for any other reason. The insured can cancel their policy if they pay off their lease or their loan early, or they can keep it in effect. It really is up to them. If they sell their equipment, we can prorate the cancellation. If there's a total loss, we can terminate the policy on behalf of the insured and offer a prorated return premium. Just like a lease or a loan, once the financing is closed, so is our policy. Nothing can be added to our policy once it is issued. Another nice feature is we provide 100% actual cash value on all equipment. This is important when writing multi-year policies. The limit on the policy day one should be sufficient to pay losses over the life of the policy. This is also good for the insured considering they receive their entire claim payment at once and not in pieces. Replacement cost is paid in two phases. The first phase is the 80% actual cash value piece, and the remainder of the loss payment is paid after the claim rep receives receipt that the equipment has been replaced. This leads to longer wait times between claim payments and does not make the insured whole all at once to purchase another piece of equipment. We took this into account when designing this program. Our coverage is the broadest in the multi-year policy space. Besides offering 100% actual cash value, our PDI policy is designed to cover equipment listed on the policy if damage is due to an unforeseen accident directly resulting from a collision, earthquake, fire, flood, hail, hurricane, loading and unloading, mudslides, rollover or overturn, theft, tornado, transit, terrorism, vandalism, vermin infestation, or while on location or at a job site. We also provide extended service contracts at the point of sale. An extended service contract is not an insurance policy. However, the contracts are backed by a contractual liability insurance policy, also known as a CLIP. Our ESC covers unexpected covered repairs to equipment in the case of a mechanical failure. Sometimes these plans are referred to as extended warranties. However, only manufacturers can provide warranties on products. A warranty is included in the purchase price by the manufacturer for assets such as construction equipment, automobiles, or laptops, to name a few. Extended warranties can also be provided by the manufacturer at an additional cost. An ESC acts just like an extended warranty. However, because it's not provided by the manufacturer, it cannot be called an extended warranty. An ESC plan is an agreement to pay for failure to a covered component on covered equipment. Just like other extended service contracts, Starwind's equipment's ESC becomes effective when the original manufacturer's base warranty expires. Although an ESC does not cover wear and tear to equipment, depending on the plan purchased, our ESC may provide protection for the equipment's powertrain, hydraulic system, electrical system, air conditioning system, as well as many other components according to our master part schedule in accordance with the terms and conditions. Our equipment eligibility mirrors our PDI appetite, except we only write ESC on new equipment still on the dealer lot. Once the equipment leaves the dealer's lot, we are unable to offer ESC. We offer comprehensive master part schedules for our ESC plans with options up to 5,000 hours and 60 months with 3 plan choices. Superior, which has the broadest coverage, powertrain and hydraulics, this is a scaled down version of Superior, and powertrain, which only covers those parts.
That all sounds amazing, Randi. But one thing that is always on my mind when it comes to insurance products is the deductible I have to pay. So talk to us a little bit about the deductible for this ESC plan.
Amanda, I couldn't agree more. I'm always looking at my own deductibles as well. So a helpful feature of our ESC plans is they don't have a deductible. This helps the customer save on out-of-pocket costs. Most finance companies will finance the ESC into their lease or loan. Offering an ESC to your customer can help them finance the repairs as a way to plan for the long-term cost of heavy equipment ownership. The primary cost that drives up prices is labor, followed by other overhead such as utilities. Given the rising labor costs, locking in future costs at today's dollars makes sense for small to medium-sized contractors. And PDI and ESC can work together to cover claims. Another competitive advantage, and one that is unique to Starwind, is we utilize one claim adjuster for both products simultaneously. Even though we offer 2 products at the time of a loss or repair, we have one claim adjuster to make sure the insured or customer is receiving the highest level of service by using both the policy and the plan together.
Is that unusual, Randi?
It's very unusual. It does not happen today. No other insurance competitor is coordinating claim payments between an ESC plan and a PDI policy. We are the very first to coordinate these, and as we go along, we will have data that no other insurer has access to. How it works in real life is quite differently than how it should work. All other carriers have ESC repairs submitted after the repair is completed, while a PDI claim is submitted at the time the equipment is brought to the dealer for repair, generally right after a claim ensues. This is a real life example I came across that made me reevaluate how contractors' equipment claims should be handled. A very large piece of equipment was being hauled when it hit a bump and severed the frame, rendering the equipment unable to be towed. A crane had to be brought in to move the equipment off the road to protect it. In the meantime, a flatbed was en route to the equipment and another crane had to be brought in to put it on the flatbed and take it to the dealer. The cost to the insured was $16,000 out of pocket.
Wow.
It was a lot.
That's a lot.
It was a lot. When the equipment was brought at the dealer shop, the dealer knew right away the damage to the frame was a known manufacturer's defect and would be covered under the ESC plan. However, the dealer didn't know about the crane and flatbed costs to help to protect the equipment, which would have been covered under the PDI policy. Once the repair was complete, the dealer notified the ESC claim rep, but it was too late to access the PDI policy since more than 60 days had passed. If a repair is taking longer than expected, for example, waiting on a part to come in, we're able to pay for any labor costs that have been incurred up until that point. There's no reason for a dealer to be sitting on, say, 10 hours of labor when we could pay that and wait for any additional receipts to settle the repair or the claim. We understand our customers need their equipment back as quickly as possible so they can continue making money for their business. Every day they're without their equipment costs them time and money. We have made the claim process more streamlined with less friction for our insureds and dealers and more cost effective for us. Setting up both claims at the onset of any repair speeds up the claim process by up to a minimum of 2 weeks or more, thus making it easier on the dealer to release the equipment back to their customer. Our job is to make the customer and the dealer happy.
This sounds like a great way to do that. I mean, I know even just normal car repairs seem to take longer and longer as, there may be a part that you're waiting to be shipped or that is out of stock. I can only imagine that for massive equipment like this, that may even be more of a compounded issue. I would assume in some instances it can be really hard to get the parts or even the mechanic you need to work on that kind of equipment.
Oh my God, Amanda, that has never been more true than right now. The reason I started this program was because I saw firsthand small to medium-sized contractors getting cheated. I personally called the insurance carrier when those crane and flatbed receipts came in and could not be paid. I begged the carrier to make an exception for a claim not being reported in a timely manner because a dealer did not advise us of the repair. After my initial call, the carrier never spoke with me again. I got tired of the small business owner being treated unfairly by people who meant well but didn't provide what the customer paid them to do. At the time, I advocated for the company to adjust their claim handling in favor of a more customer-centric model, but they wanted nothing to do with it, which is when I put my business plan together for this program. Construction is the backbone of this country. Small businesses drive our economy. Nothing moves in America without insurance. We as the insurance community need to do a better job of not only being an advocate for our small insureds, but also looking out for them at a vulnerable time when there's a claim. A lot of small contractors rely on their ESC and PDI claim reps to do the best job they can. Since this is a totally new concept in claim handling, I have personally trained our claim reps on how to handle claims. Offering multi-year plans and policies for equipment tied to a lease or a loan, coupled with comprehensive claim review across both products, is something we want every small and medium-sized contractor to have access to. As I mentioned previously, having more certainty around heavy equipment ownership reduces the burden and anxiety of future repair costs.
This sounds like a great way to get everything you need done at one time in the most efficient way possible. So kudos to you for developing this, Randi. Are you seeing success at this point? I know you just got started.
We have been seeing success. We have been onboarding producers, and it's an engine that takes a little bit of time to get going because of how we don't work with PNC licensed folks. We work with limited lines credit licenses. It's a whole different category. I will say Starwind and CRC have been wonderful. They have been incredibly supportive. I couldn't have asked for a better partner. And I am so excited to bring this to contractors and small businesses out there. I totally agree with you about automobiles. If I can find a way to do this with automobiles and their ESC and PDI policies, I would absolutely do that. I've been thinking about that for truckers and things like that. I just got to get my little piece up and running.
Right. Well, we'll keep our eyes out for more things to come from you then down the road.
Yeah, that large equipment, though. I mean, bigger equipment, bigger bills, those things are enormous. All I can think of when we're talking about these things are the giant wheels and the guys stand in front of those giant earth mover things. When I think of big equipment, that's just what I think of.
It's funny because the things people think of total losses. Let's say there's a flood. This isn't a total loss. You're going to take the hydraulics out. You're going to dry them out. You're going to put them back in. It's not a total loss. But those are the things. So it's really opened my eyes to a lot of things because I've always been on the insurance side. And then I was working for a company who does a lot of these. And I'm thinking to myself, why are we doing it this way? Like, don't you, the ESC manager, the claims manager, I'm like, don't you know what the insurance policy says? No. The insurance people, so it's two different things. And I'm looking at this from a 30,000 foot view and saying, we can do this so much better. And when I brought it up to them, they thought I was nuts. Don't touch it. Don't change it. We get commission. Don't do anything. And I'm like, well, don't you care about the small guy? And when I started pitching this to some reinsurers and insurance carriers, they're like, how come we're not doing it now? I said, I don't know. I wasn't there to tell them about it.
Yeah.
But it was kind of funny. And I'm very passionate about this because I feel like this is one of my missions. This is something I want to bring. After 35 years of doing insurance, we can do a better job in the insurance industry. We should have done better during COVID. We could do a much better job. I don't want people to be like, oh, I have an ESC policy. Oh, look, it's covered. It's not a lottery ticket. We shouldn't treat it like a lottery ticket.
Right.
We know that people don't read their policies. We know people don't read their plans. That's why we're going to do it for them. We're going to help them.
Well, that kind of rapid fire thinking can only lead to rapid fire, our little question game that we play. And this is just, Randy, just answer off the top of your head. So our first question is, if you weren't in insurance, thank God you are, but if you weren't in insurance, what would you be doing? Oh, God, I was going to go into psychopharmacology, which is kind of esoteric, but it's to determine, SSRIs and how they affect the brain and things like that. I don't know why I wanted to get into it. It was the first thing I ever thought that I would do. But my dad wanted me to get a business degree. And since he offered to pay for my degree, the golden rule applied, which is the one with the gold makes the rules. So I got a bachelor and a degree in economics. Well, and that leads perfectly into the second question, which is, what's the best business advice you've ever received? Was that it?
No, not to get a business degree. Well, that would be good. But honestly, I love my dad to death. He was such a very fair man, and I've gotten a lot of my business sense from him. But he told me as I was an underwriter trainee, he says, Randy, this is not a personality contest. Not everyone is going to like you, but they need to respect you. And I've given that advice to many others starting out in the business world.
I love that. I love that description of your father. He was a fair man. No one says that about their. They're always like, "Oh, he's my hero" or something vague. But that I like that. I would love to be described that way. Yeah.
He's a very fair man, and I've as an underwriter, I've gone back to producers over the years where they didn't like my decision, but they thought it was a fair decision.
Right.
And that's all you can ever hear me out, and then we'll go from there. But he was a very fair man.
Nice. And our third and final question is coffee or tea?
Tea with honey, please.
Okay. I'm kind of neither one, actually, unless it's cold coffee.
I'm neither one either.
Oh, after all these years, Scott.
Yes. I know. I'm the only graphic designer I've ever met that doesn't drink coffee.
I'm not a coffee drinker either.
I don't like hot things. Make me feel like I'm boiling on the inside.
I even cool off my hot cocoa.
Same. Just give me chocolate milk.
That's how much of a man I am. Yep.
Skip it. Well, Randy, thank you so much for joining us today. Your insights in how Starwind equipment is raising the bar. Truly valuable for all of our listeners today.
Yeah, and for more information or to explore, how Starwind Equipment Services can help your clients, reach out to your CRC specialty broker or visit the Starwind Equipment website at starwindequipment.com.
Thanks for joining us, Randy.
My pleasure.
And thanks for listening to Placing You First. To all of our listeners out there, we'll see you next time.
Are you ready to move faster and go further? Take your career to the next level. Join Team CRC to gain access to best-in-class tools, data, exclusive programs, and more. Send your resume to resumes@crcgroup.com and read testimonials from recent hires on LinkedIn.
Search for CRC Group.